about Investec, even though I said we were only talking about the direct asset managers. Investec, of course, is a bank here and in the UK, but it's got quite a lot of asset management in it because it's got both institutional asset management and private client asset management. So we're going to talk about it here. Established in 1974 on Fox Street, downtown Johannesburg, by a bunch of guys. Now, of course, headquartered in Sandton, Johannesburg. It's got a market capitalization, and remember, you've got to add the INLs and the INPs because it's got that funny dual structure. But if you put that lot together, it's 83.5 billion rand. Price earnings ratio 11.84, dividend yield 5.45. What's your overall view of them? And then talk to us about the Brexit impact.
Yeah, so I like it. You know, it's a local company that's managed to really expand and leverage into quite a global player. You know, big presences in the the UK and Australia. You know, we see when the rugby plays there, or the Investec branding on there. They don't sponsor local rugby for some reason. But they're good. You know, they've built a good ecosystem where the banking feeds into the investment, the wealth management, and the asset management in that regard. And their highest margin products are where they have their Investec funds, is to try channel funds through into that.
So they have lending relationships and private banking relationships and asset management relationships with their top clients.
And they've got a very niche client base. You know, they go for the private banking high net worth individual. So once they're in their environment, it's a lot easier for them to pass through asset management and wealth management services.
Okay, but let's have a look at the share chart, because when I say there was a Brexit impact, people were saying Investec was a good buy in late May this year, because they said the Brexit thing has created uncertainty, but it'll never happen. Then those idiot Brits voted for the own goal of the century, and it's fallen since then. So it was at 100 rands a share, looking fairly inexpensive, but now it took a dive. And because the concern is that when all push comes to shove, the Brexit is going to cause London to go down sharply in terms of its local as a European financial center. That's going to move to Frankfurt, and then people are going to get not paid well, and there's going to be a reverse wealth effect in the UK. I don't know, this all sounds a bit too apocalyptic. But the share price has not recovered.
It hasn't, and along with other UK exposed stocks in that regard. Look, Brexit has given you a 20% discount on the stock, so if you like the business model and you're prepared to wait out probably the weakness in the UK economy for a while, the foreseeable future, I think it's an opportunity. I really do. I think they diversified enough between Australia and here. You know, more than half of their profits are still generated in Southern Africa. So I think they're okay. I think they would have made plans to
strengthen the pound returns, right? Because they report in pounds, so the rands going back to pounds will make those numbers look better.
Yeah, so a few moving parts, but overall.
What about, Old Mutual is busy dismembering itself because the management team there says there's no synergies between here and there. Is it not true of Investec as well? Somehow they do extract synergies from the cross-border.
They do, and they've been one of the companies that's done that quite effectively. You know, they've got all their platforms in that regard, that ecosystem, that transactional banking, asset management, wealth management works.
And then the offering of global investment solutions to South African clients through their London-based
and that's very
operations.
popular at the moment now. So if you're an SA client, you're getting offered offshore investments all the time through the group.
So it sounds like you're going to lean hot on Investec.
I think so, Paul. I like it. I mean, I don't think they've done anything wrong. I think they'll weather the storm. Great dividend yield, worth exposure.
Okay, I'm going to tip towards not hot, just on account of the fact that the Brexit thing looks a little bit sloppy to me still, although I concede that there could be some upside to that equation as well.